Cool. Well, thank you, Alden, and thank you for Capital on Stage for hosting this event. This is actually my first time here, and it's quite a nice change to be on the other side of the table for once. So my name's Rob Hodgkinson. I'm an investment manager at Beringea. We're a UK and US fund. We've got about $650 million under management. So I thought I'd quickly tell you a bit about me, a bit about Beringea, how we see ourselves sitting in the ecosystem, and why we think that entrepreneurs take money from us. So I'm a historian by degree and a banker by training, which may seem like odd bedfellows for investing in venture capital, but actually I think it enables me to have quantitative insights into qualitative decision making. So I've been at Beringea for about 2 years. Beringea has been around for about 25 years, and really we're in the UK and the US. We have some of the top performing funds in the UK, and we're really looking to raise 20 to 30 million pounds every year. We're investing kind of late Series A to Series B, so kind of 2 to 5 million pounds. And you should be able to find all of this on our website. I mean, we actually see ourselves more as growth investors rather than venture capitalists, in that actually we're looking for businesses with £1 million of revenue at least, and profitability within 12 to 18 months. We're generalists, so we actually have investments in healthcare, ad tech, materials, hardware, but the history of Beringea is really in the media space. So we started off in content creation, investing in kind of family favourites like Thomas the Tank Engine and Sooty and Sweep. But we've seen that as the media space has become digitised, so our investment strategy has moved more towards ad tech, digital media agencies and distribution. And actually we're starting to see our investment strategy go full circle and moving back into content creation as that space becomes more measurable and more efficient. So I guess why do people take money off us, or where do we see ourselves in the ecosystem? Well, I'm just going to contradict what the part from CMS said actually, in that we are not unicorn hunters. So just to define ourselves by what we're not, of course we're looking for kind of $1 billion exits and would love those, and recognise the kind of power law of venture capital whereby the key returns come from a small number of investments. But we're really looking for capital efficient businesses where if we're investing £2 to 5 million pounds, we can actually get a good return from that money. Secondly, we're not European wide, so we are UK, US investors. We think there's something special going on in London, and we think it's really unique within Europe in terms of the centrality of government, fintech, media, fashion, and technology. And so we're really focused on kind of the London and UK scene. And thirdly, we're not entrepreneurs. And of course, we are entrepreneurial. We like to provide support. We provide guidance at kind of board level, but we don't offer the kind of a la carte, buffet style VC where you get kind of generic operational support. We actually prefer to give our entrepreneurs the structure and resources to be able to recruit people and set up their businesses in their own way. And so that's kind of what we're not. So what is it that we stand for, and why is it that people take money off us? Because we're in a really competitive market where you've got lower capex requirements than ever before to get to profitability, and increasing funding options. And we're seeing real competition from a lot of the great VCs in this audience. So we think that people take money from us because of our media background. We're good at pattern recognition. We've seen a number of cycles, and we invest across the value chain. Secondly, we have that US connection. So if you're a UK company looking to grow in the US, or for whatever reason, vice versa, then we can really help you, plug you into that ecosystem. And then thirdly, we're an evergreen fund. What that means is that we're raising money every year, so we can actually hold on to assets for a bit longer. We don't have the same pressure to sell businesses, so we can really help you go through all the gears to get to a good exit. I thought I'd just finish by talking about just a comment on kind of fundraising, which is to say that all investors expect you to have a rock star team, a killer product, and you're disrupting a massive market, and everyone's going to see that, but don't underestimate the kind of power of narratives. So we're really looking for stories. And at one level, investing is really about that kind of emotional investment in people. And I think there's a great quote in Moneyball, the film, where he talks about, it's hard not to get romantic about baseball. And I think it's exactly the same about investing in startups. It's hard not to get romantic about seeing an entrepreneur really take their business from an idea right through to exit. That's it for me. If you've got any questions, ping me an email.